One of the most pointed moments where I really saw a contradiction here was that he said something like the Fed's job is to set interest rates. So I said, wait a second, hold on. So you believe in price controls? And he said, no, of course I don't believe in price controls. But I said, isn't the interest rate a price? And you want the Fed to control it. So that's price control. He's like, no, that's not what I'm saying. Well, don't price controls control the price, control the prices of goods in the economy? He's like, yeah, well, so everything in the economy is affected by interest rates. Yeah. So you believe in price controls of everything? No. So he couldn't. It's not like he objected to that and proved that I was wrong. It was like putting a contradiction algorithm into a computer and it just kind of glosses over it and keeps going. Even many gold bugs and silver stackers do not really understand the point that gold is money. We're not making a historical point that in the past it was money and now we have the dollar. I'm saying right now, all the time, when you use a dollar, you're using the gold value of a dollar. The gold is the money itself. But if you look at the S&P versus gold since 1971, gold is outperforming. So you could have just done nothing and just held money and you would have made more money. The monetary system is still based on gold because once the gold exchange rate with the dollar or any other currency goes to infinity, that is the definition of hyperinflation. And some people are just really incapable of understanding that because it means they've been going in the wrong direction. You have to turn around, go back, and it's going to lead them to disaster. And that's what I'm saying. My point is that many gold and silver bugs do not understand that gold and silver are money, okay? Gold is, by definition, what a dollar is. It's a substitute for the dollar. It's at an inflated rate now that doesn't make sense. So we're buying it now on a huge discount, assuming that the substitute collapses and all purchasing power goes back into the original, because that's what's going to happen to save the division of labor when the substitute collapses. And silver, by the way, is how I see it, is the primary gold substitute. When we're on a gold standard, silver is the main gold substitute, unless there's a functional paper one or digital one that is honest. And on a silver standard, gold is, a silver substitute, but we're not on a silver standard anymore. We're on a gold standard. What I'm saying is that gold and silver do form the basis of all monetary systems. It's not an escapable point. You can't say we have an option to base it on gold or an option not to. There's no option. There's only one option, and that is to base it on gold, because that's where all prices originate from in the past, and you have to continue that chain. You must continue the chain, unless you have a Cambrian extinction, and you really start life up from the beginning, and humanity goes back to a pure system of barter where gold doesn't even exist. That's really Armageddon, and that's not going to happen. Okay, we're going to have the end of a monetary system. It's not going to be the end of the world. It's going to be the biggest economic disruption in the history of the human race, for sure, but it's not going to end us. So whatever monetary system we work out, also, after this huge disruption, after the biggest disruption, economic disruption, monetary disruption in the history of the world, there's not going to be any central body that says, okay, well, we screwed up. What are we going to do? Centrally plan a new system so that it can work now. It's not going to work that way. You're not going to have the IMF or the WEF or the Bank of International or whoever these globalists are. They're not going to come together and impose a new system on us that works. It's not going to be a central plan. It's going to be the breakup of the economy, like the breakup of the Roman Empire, and then you're going to have pockets of people exchanging things for gold and silver because it's honest, or an honest substitute for it, and then gradually, after the big explosion, breakup, collapse of the Roman Empire, American Empire, same thing, then you're going to have a rebuilding of pockets, and gradually they're going to connect again. It's going to take a while. That's what's going to happen. In terms of what's going to be planned or what should be planned as the new monetary system, how about honesty? Okay, gold and silver are money. Use that. When you substitute it, don't inflate it, and that's going to be the new monetary system, just like it is after every collapse of every empire. That's what always happens. It's what's going to happen now. Technology does not change the nature of who we are, and we're going to see it again. Okay, so the second part, how do I see it unfolding exactly? I can't see it, how it unfolds exactly in terms of the consequences of it. I don't know how many people will get rich. I don't know exactly what the political landscape is going to look like. I don't know. It's just going to be a lot less centralized. It's going to be a lot more regional, local, that kind of thing. I know people want a more meaty answer than that. So I guess I could say, look, the dollar is eventually going to die in the streets of the U.S. I've said this before. The dollar is by definition the other side of the assets on the Fed's balance sheet. Most of those assets are either treasuries or mortgage-backed securities. I don't see treasuries defaulting outright because they'll always raise the debt ceiling to enable more paying back of those things. But mortgage-backed securities could default because people could theoretically stop paying their mortgages. And when those start to default, what you have is a massive deflation, because if one side of the dollar defaults on balance sheet, then those dollars go out of existence on the other side because it balances out. And then you have a massive deflation. And then what happens is the Fed is going to have to print, to replace those dead dollars, And that's when you'll start to see the supermarkets raise prices on bread on the front end, right? It's connected in a very long chain, which the end of the chain at the supermarkets cannot see what's happening at the Fed's balance sheet. It's not like a supermarket, director is going to look at the Fed's balance sheet and say, oh, well, mortgage-backed securities defaulted today. I guess we have to raise the price of bread by 50%. That's not what happens. It's a chain that filters through the system, and no one part is conscious of another part directly. It's just all connected. This is not the only way it could happen. You start seeing defaults on mortgages and falling housing prices, and then banking trouble from a bank that owns all these mortgages, and then a bailout in the Fed's balance sheet, and it goes up like $5 trillion in a day, and then the dollar starts to collapse in the streets. Maybe that's one way it could happen. It could happen 1,000 other ways. I don't know. If BRICS, theoretically, the BRICS or a bunch of regional powers can group together and say, we're going to trade in gold now. And either they're going to say, like, this is the currency that we're going to back with gold, whatever that means, back with gold. If they make it believable and they actually are honest, which I don't think any of them are going to be. So theoretically, yeah, you could have countries that decide they want to trade honestly. And with gold, either directly actually physically shipping the physical metal, I don't think this is not going to happen, or making an actual honest currency. Fine, that would undermine the dollar. Yeah, but it wouldn't give them any advantage other than actually making their countries rich in a real capitalist way with freedom. So what I think is going to happen is that no, BRICS are not going to come up. They might come up with some kind of way to try to cheat the system and make it look better, but that's not going to work. So I see like the entire international trade as it exists today collapsing and then rebuilding from the bottom up, just like I see the collapse of the entire end game of no central planning, a monetary system, no central planning. This is just organically happening. When the gold standard happened, it wasn't like people came, like, these international organizations said, okay, now we're going to have a gold standard, we're going to trade on gold. It's just country after country started using gold because other countries are using gold, and it worked. That's all. You don't need these plans. No plan is going to work. Frankly, if there is a raid on the COMEX and people actually want the physical metal, then it will be a problem. And I do see that happening. But it has happened before that I think in 2015, 2016, when silver was at a low, and you would expect silver to be drained after that, but the supply went back up. But then you could say it went back up into the COMEX because the demand for silver was low back then. So if we're at a point where if what's happening, we don't know exactly why the registered silver is going down. Yet we can theorize, oh, maybe it's that people want physical silver, maybe, but I don't know. I haven't interviewed or asked these people who are taking the actual stuff what they're doing with it. I don't know, but I want to think that they're taking it to save it because they see a monetary collapse, and maybe some of them are. And if that is happening, then yeah, it is significant that if these people are taking the supply off for that reason, then a low supply would mean that the COMEX could crash if too many redemptions are asked for that they don't have. I don't know if this is going to happen. I know eventually it will happen. I don't know exactly how, but I think it's definitely a good sign that the supply is so low, because basic economics, if supply is low, price is higher, right?
The script explores the contradictions in modern monetary policy, particularly in how central banks, like the Federal Reserve, set interest rates. The speaker points out the irony of advocating against price controls while simultaneously supporting the Fed's control over interest rates, which they argue is essentially the price of money. This contradiction highlights a broader misunderstanding of how deeply central planning affects the economy. A central theme is the enduring role of gold and silver as money. The speaker argues that gold isn't just a relic of the past, but remains the true foundation of the monetary system. Whenever people use dollars, they're indirectly engaging with the gold value underlying the currency. Silver, similarly, is seen as a primary substitute for gold, particularly during times of economic instability. The argument is that all monetary systems are inherently tied to gold, and any attempt to detach from it is unsustainable. The current fiat-based system, especially the US dollar, is described as being on the brink of collapse. Factors like mortgage-backed securities potentially defaulting, massive debt expansion, and unsustainable monetary policies could lead to deflationary or inflationary spirals. The collapse of the dollar is framed not as an apocalyptic event, but as an inevitable transition to a more stable system. Following this collapse, the speaker predicts a return to decentralized gold-based trade and monetary practices. This process is compared to historical examples like the fall of the Roman Empire, where localized systems gradually rebuilt and reconnected economies. Unlike today's centralized systems, the post-collapse monetary order is expected to be organic, rooted in honesty, and the intrinsic value of gold and silver. The speaker also expresses skepticism toward global initiatives like those from BRICS or institutions like the IMF, arguing that centrally planned solutions are unlikely to succeed. Instead, the new system will emerge naturally as trust in fiat currencies erodes. Signs of this shift are already visible, such as the decreasing supply of physical silver, suggesting increasing demand driven by fears of monetary collapse. If redemptions for physical metals outstrip reserves, systems like COMEX could face significant challenges. Ultimately, the speaker envisions a disruptive but necessary transition, where gold and silver regain their rightful place as the foundation of trade and economic stability. While this process will be painful, it is portrayed as an essential reset toward a more honest monetary system.